Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Friday, everybody. We are back. We got 15 minutes of finance to go through. Guys, another good day in the market. I feel like I'm saying that so often, which is... it's euphoric, to be entirely honest. When maybe like a year ago, when I was trying to be more consistent with the podcast, it felt like every episode I was like, I know the market's like stagnant and going down. It's ever slowly going down. It doesn't feel good, but I promise, like it'll turn around. And now I feel like I have to do the exact same thing on the other end. It's like, yeah, it's going up, but it will eventually come down. But that's not what we're here to do. We're here to get you excited about investing. So yeah, eventually, sure, there will be a downturn, a 10% drop, however you want to say it. But it ain't today. It ain't right now. So enjoy this moment, guys. A lot of things. Well, let me say it more professionally. Our term of the day is penny stock, okay? Penny stock is any company whose share price is under $5. And what I was about to say was there are a lot of things that are benefiting from this stock market boom. What I should have said was there are a lot of growth companies, early young companies whose share prices are under $5 that are now no longer penny stocks, okay? They doubled, triple, quadrupled, and we'll talk a little bit about one of them today because they were one of our picks. In fact, it was our riskiest pick. It was the first penny stock I've ever really suggested, and it worked out, at least for now. And I would also say that, so we're talking about SoundHound, obviously, ticker SOUN. We were talking about this. If you purchase our newsletter, if you pay for our newsletter, which is our stock picks every month, you would have had SoundHound on your watch list. I think it would have been May. Maybe it was June. I would have to look at the newsletter. But we were making a suggestion that SoundHound should be, in a growth portfolio, and we bought it for quite a few clients. And we bought it at like $3.50. I think it's right about $14 today. So it's absolutely the number one AI stock. They do voice AI. It's the number one AI stock all year, bar none, not even close. I think Palantir is maybe half of what they've done, and Palantir was also on our list. But that's the term of the day, guys. Penny stock, okay? I know it's misleading because it's got the word penny in it, but it's anything. If you have a stock that's worth $4.99, that's a penny stock. The second it hits $5, no longer penny stock, okay? So it's any company less than $5. Okay, excuse me. I'm just getting over a little bit of a cold here. Let's read the news because we know it's going to be good. And then I'm going to rant a little bit for you guys about why you don't need a financial planner, okay? And technically, that's what we do, but it's not intrinsically what we do. And I'll explain here, but I just am getting so mad at the industry. And if you have a financial planner that's not us, or advisor, wealth manager, however you want to call it, please really take this serious, and don't be afraid to talk to them. That's the number one thing I'm seeing is a lot of people are like, well, I've been with them for a long time, and they've done good by me, but really they haven't. And I'll explain exactly why, but I think they're ripping people off. I really do. They're expensive hand holders, and I'll explain that. But let me read the market news, which is really why we're all here anyways, to get a take on this. So today, stocks rose Friday after closely watched employment data came in largely as expected, reinforcing investor confidence in the strength of the economy and expectations that the Federal Reserve will cut interest rates again, which we are hoping they will. The S&P 500 NASDAQ composite recently rose up 0.2% and 0.6% respectively after hitting new all-time highs this morning, while the Dow Jones Industrial Average slipped 0.2%, giving back earlier gains. Stocks are coming off a down session on Thursday when the equities market hit the pause button on post-election rally that has pushed major indexes to a series of record highs. The Labor Department's job report for November showed that employers had 227,000 jobs in November, a big jump from the previous month, only slightly higher than the number economists had anticipated, while the unemployment rate was in line with expectations at 4.2%. The employment numbers are among the last key pieces of data before the Fed's next interest rate decision, which is scheduled for December 18th. Okay, mark your calendar for December 18th. That'll be I want to say a big day, but it could also be a bad day, depending upon how they interpret that data or how they make decisions with that data. The yield on the 10-year treasuries, which is sensitive to expectations about where interest rates are headed, was about 4.16 recently, down from 4.18 just before the release of the employment data. Markets are now pricing in a near 90% chance that Fed will cut its benchmark rate by a quarter point this month, down from the 70% likelihood priced in yesterday, according to the CME Group's FedWatch tool. Among noteworthy stocks on the move Friday, Hewlett-Packard shares were up 11% after the server maker reported better than expected quarterly results, buoyed by strong AI demand. Shares of Lululemon, ticker Lulu, gained 19% after the maker of athletic apparel reported strong earnings and raised its outlook. Ulta Beauty, ticker ULTA, and DocuSign, ticker DOCU, were up 10% and 20% respectively. Wow, that's actually really impressive, 28% after reported earnings. Shares of large cap technology stocks were mostly higher, led by Meta Platforms, which was up nearly 3%. Apple, Microsoft, Tesla, Amazon, and Alphabet also rose, while AI investor favorite Nvidia fell 1.5%. Bitcoin was trading at 101,000, up from below 98,000 earlier in the day, but still below the record high of 104,000 set on Wednesday. The digital currency has gained about 40% since the presidential election, amid investors' hopes that a presidential White House, Trump administration, and supportive Congress will adopt measures that benefit the crypto industry. Gold futures were up slightly at 2,660 an ounce, while crude oil's futures rose about 1%. Okay. Look, there's no doubt this is absolutely fueled by Trump. Okay, the presidential hopes, the new president has created hope. Okay, and I don't care what you think about your political belief. That's just follow the money. Money is almost always truthful, and money is going in. Money is following Trump's plan. They think they believe that he will, and by they I just mean the powers that be with all the money. They believe that it's going to be a good 4 years for America, and we believe that here. Okay, we believe that here. And it's hard to... Sure, the guy's got bad rhetoric. There's no doubt about that. But boy, if he puts money in people's pockets, it's going to be hard to say anything about the guy, because he's already a mud monster. Like, there's nothing he could say or do that's going to make people who already love him like him less. And there's probably nothing he can say or do to benefit his case with the people who already hate him. However, if he puts money in their pocket, that might be the one thing that he can do. Okay? That's the one thing that can really boost sentiment with him. But we're not here to talk about Trump. I just wanted to say that that's really the optimism that I'm seeing. I don't see anything else right now. Obviously, companies are making money, but with his tariffs and everything that's coming on board, people are pricing in just an explosive boom. We're talking like 1920s, 1980s, like just this economic snowball effect, I guess. It's just going to keep getting bigger and bigger and bigger as it goes down the hill. Let me take a drink real quick of this coffee. Okay. Now I want to talk about financial planning. Okay. Look, I started my career as a financial planner. And I started my career, I had a Roth IRA, and that was because my dad told me to do it. He's like, hey, my dad has always been the type of person that he'll give you advice, and then if you choose to do it or not do it, that's your own fault. And it's been, every single time that's happened, I've looked back and been like, dang, he was right. Okay, there has never been a time where he wasn't right about stuff. I'm waiting for it to happen so I can really just rub it in his face, but it just hasn't happened yet. And that Roth IRA was other than my interest in stocks and companies, it was my real first dive into the business of finance, essentially. And when I went to my first job, I worked at Lincoln Financial. I won't specify the specific RIA, but Lincoln was the broker dealer at the time. It was all about products and sales. They did not care one bit about my educational level. If I knew what a Roth was or an IRA, they didn't care. What they cared was I charismatic? Was I going to be able to bring on new clients, keep clients, make people happy? And what I learned through that whole process was every advisor that I worked with was dumb. And I mean that. Okay, if they were here, I would be even more, not vulgar, but illicit in my distaste for the way that they did their practice. So it was all about getting a client. So we would get a client, we would spend an hour with them, get them to want to roll over their money, purchase an annuity, life insurance, whatever it was, buy a financial plan. And then once everything was done, we didn't look at their case, their file, their investments, anything for a whole year. Okay, now, there's a standard. You have to meet with a client at least once a year regarding their investments. And by meet, you just have to speak with them. So it could be a 15-minute call, right? Like that's ridiculous. But that's what these people would do. So they would get a nurse who has $800,000 in her 403B, roll that over into an IRA, charge her $5,000 for a financial plan in retirement, showing how we're going to fund her retirement with her Social Security, 403B, and her IRAs. And, we should put you in this annuity. And so a client that's retiring is probably to a financial planner. Let's just use $1 million. They have $1 million of investable assets. They are probably worth 25-ish grand a year to a financial advisor. Okay. So think about that. 25 grand in revenue. I just need 4. I need 4 people retiring, and then I get a 6-figure revenue boost right there. So what they would do, they would meet with them, sell them on these products, show them their financial plan, and be like, if we buy this annuity, this amount of money is covered. If we invest your IRA to get 8%, this amount is covered. And boom, look, now when you're 80, you're going to have $1,010,000, and you can give your kids $1 million. And the nurses or whoever the client was would eat that up, love it, be on board, boom. Nothing. They would never even be checked up on during the whole year until it was time for their annual review meeting. And then they would meet with them, or before their meeting with them, they'd look at their stuff for 15 minutes. And then they'd go into the meeting and be like, yeah, it looks like we did good this year. Like everything's on track. Do you have any questions? That would be the meeting. Okay. But this is what a lot of people don't know. And I want to harp on this very, very intentionally. Because so far, maybe everything I've said, you're like, well, yeah, I mean, that's okay. Like, so what? If they're doing good, what does it matter? They don't do anything. Okay? When I think of a financial advisor, if someone I would want, I want them being the decision maker. Okay? And what these financial planners do, 90% of them, probably more, as far as the ones that I've seen, 95% of the financial advisors do this. They hire another fund manager or another financial advisor, wealth manager, whatever you want to call it, to make the investment picks. So they're not actually doing any investment choices for the client. They're just putting them in a product that has another fee because there's another person managing it. So now that advisor gets their fee, the fund manager that they paid or that they're choosing to manage the client's assets gets paid, and then the funds in the fund, they all have expense ratios. So now a client might be out 1.5%, 2%, having no idea that over 20, 30 years, that 2% is hundreds of thousands of dollars, if not more, that they missed out on. Okay, all because they got shown a pretty graph saying, hey, if we do this, this is covered. Hey, if we do this, this is covered. It's all BS. Okay, it's expensive hand-holding. I do not like financial advisors because it's expensive hand-holding and they don't really do the amount of work that they should do to get the amount of money that they get. It's an extreme ripoff. I do not like it. Now, there is something to be said. If you aren't very good at this, yeah, I would hire an advisor, and I would hire one like us. We're fiduciaries. We do all the investments are in-house. Everything we do, we pick. Okay, I know intimately what is in every client's account. Intimately. Okay, if I would have, I knew something was wrong when I was younger. When I was like, wait a second, what are we doing? We're just putting them. We're putting them in a. They'll pick between 10 funds based upon risk tolerance. It'll be like conservative, income, growth, max growth, speculative. And I'll be like, but wait a second, where does this, who's managing this account? And they'll go, I don't know. Someone at, what would be the TAMP that we used? Dang it. A TAMP is a turnkey asset management program, and they're a third-party company that does all the investments. So I can't remember which. Oh, dang it, it's going to eat me if I can't remember this. But anyways, we had one at Lincoln. And what would happen was we'd get a client and we'd say, hey, these are professional money managers. We're not professional money managers. We're the quarterback. We get everybody in line. We'll get your lineman here and your running back here and your wide receiver here. But they're not even the quarterback because they don't even have the ball. They don't throw the ball. They don't do anything. They're like the high school JV assistant coach who's like, okay, let's just get all of these kids pumped and excited. That's what they are. They're the assistant coach whose job it is to be friends with the team, right? The head coach, he has to make all the tough decisions, can't really be friends with the players. But the assistant coach, he gets to sit in the back of the bus and play Super Smash Bros. With them on the way to the game, right? They get to be best friends. That's what a financial advisor is, okay? In 99% of cases, I do not like that. And I'm bringing all of this up because we've recently lost a client. Not lost, but we were in the final interview process with a couple who had like $3 million, and we did not get the new business from them because they liked this other financial advising firm that the wife had been following for a long time, and they don't do anything in-house. All they do is get the clients, charge a 1% fee to meet with them, and then they outsource their investments. Okay? If you don't understand how that's extremely immoral, I don't know what to tell you. Okay? You probably should be with someone who's an expensive handholder if that doesn't make sense to you. What our job is at our firm is to represent the client for what the client wants. Okay, and my job is I get up extremely early to be aware of what the market's doing. What companies do we like? What companies should we be weary of? Where are some new opportunities? That's the stuff that I like doing. And really, when it comes down to it, when you hire a financial advisor or, a money manager, it's to get the return that you want. Okay, if I have someone in retirement who doesn't need massive growth to take a whole bunch of risks, then great. Then that makes my job way easier because all I have to do is make sure that the percentage, and the conversation we have with clients is, what range of percent of return would you be really happy with? And then my goal is, okay, well, they're probably a 6 out of 10 on the risk tolerance scale. And then I formulate the portfolios with ETFs, mutual funds, stocks, sometimes bonds, very little bonds, to achieve that. Okay. And these people, these advisors aren't getting up at 4:30 in the morning to look at these positions. Okay. All they're doing is thinking next client, next rollover. How do we get the next person? How do we keep doing it? Okay, how do we keep growing? It's next client, next client. They don't care about you. And I'm ranting. I know. I'm sorry. I knew when I came into that field and I was 22 years old, green as can be. And in my head, I was like, this doesn't seem right. Something's wrong with this. Okay, something is evil about this. And nobody saw it because it's greedy. It's Wall Street. That's the life they live. Okay, they want to take your money and tell you to shut up. That's what they want. And I'm just ranting because again, it's 95%. It's not everybody, but they don't want to do the work it takes to understand portfolio design evaluating companies and why a 70-30 portfolio isn't actually good for somebody who's got more than 10 years time horizon. Just there's a whole bunch of things that I could harp on the financial planning industry, but I can tell you right now, it's just expensive hand-holding. You do not need a financial planner. What you need, okay, is a strong plan that you can make up yourself. Okay, you don't need someone like me. You want someone like me. Hey, I use James. He's done really well for us like these last 10, 15 years, and I can sort of like completely wipe it off my plate. I don't have to worry about it because James is taking care of it. That's the kind of relationship that's great. That's excellent. Okay, if you like picking your own stocks and you like doing it, good. Just be aware that this is what I do for my living. I wake up and I eat this stuff. I drink this stuff. I sleep this stuff. I love it. Outside of basketball, I can't think of anything I love more as far as like what I would actually want my career to be. This is it. I'm doing it. I'm doing one of the things I love. These financial planners don't love what they're doing, and you're just a paycheck to them. So I'm at 21 minutes. I'm way ranting over. But expensive handholding, you should already know your budget. You should know how much money you want to make. You should already know if you can afford a house. You should already know term insurance is the best insurance to get. You shouldn't have any permanent insurance policies. You don't need an annuity. You don't need any of that stuff. When you spend an hour a year researching things, you will know about as much as a financial planner does when they handle your account. 1 hour a year. I mean that. I swear by that. Most people don't need any crazy planning. They're a scam. Okay. And I stand by that. And if I'm ever successful enough where I'm standing in front of other financial advisors, I'm going to say the same thing. Okay. So please, if you have a financial planner, ask questions. Well, who makes the decisions? You don't make the investment decisions? Well, why am I paying you 1%? Why do you get 1% to do nothing? And it's forever. That's not 1% one time. That's forever. Forever. I can't fathom that. That's so unbelievably immoral to me. Okay, I'm done ranting. I hope you guys hear the passion. And again, nobody cares more about your money than you. But here at 77 Financial Group, Brandon West and James Walters, we would like to earn the right to be second. So, all right, guys, that's it. I'm done ranting. I got to take a breath. I got a meeting at 12 with one of our newest advisors and a new client of his, and I got to calm down before I go into that meeting all sweaty. But as always, guys, invest early, invest often. We'll see you next time.